Hey there, my fellow investors. Welcome back to our channel. Today, we have something truly exciting to discuss: the Zurich Axioms. Now, you might be wondering, what's the big deal about this book? Well, let me tell you, many investment enthusiasts consider it the holy grail of investing wisdom. So get ready to dive into the 12 major axioms outlined in this timeless masterpiece. Trust me, this is going to be an investment journey like no other. Alright, let's kick things off with axiom number 1, risk. Picture this: you're standing at the edge of a cliff, ready to take a leap of faith into the world of investments. Sounds thrilling, doesn't it? Well, that's exactly what the first axiom's all about: embracing risks. In his book, The Zurich Axioms, Max Gunther tells us that carefully selecting investments with favorable risk-to-reward ratios can significantly increase our chances of success. Now, I know what you're thinking. Wait, isn't risk something we should avoid? Well, not according to Gunther. He encourages us to analyze potential investments and understand the risks involved. It's not about avoiding risks altogether, it's about managing them effectively. By seeking out investments with attractive risk-to-reward ratios, we could potentially achieve higher returns. But remember, balance is key. We don't want to take on excessive or unnecessary risks. Moving on to axiom 2, greed. Greed, the tempting devil that lurks within the world of investments. Gunther warns us about the dangers of being consumed by greed. It can cloud our judgment, lead to impulsive decisions, and put our hard-earned money at unnecessary risk. So, how do we tame this greedy beast? Gunther advises us to maintain a disciplined approach to investing. We need to resist the temptation of chasing quick profits driven by greed. Instead, let's focus on long-term strategies. By practicing self-control, we can make more rational investment choices and avoid the pitfalls of greed. Trust me, your future self will thank you for it. Now, let me tell you a little bit about the brilliant mind behind the Zurich Axioms, Max Gunther. He was an American-British author and journalist who dedicated his life to studying the art of investing. Gunther's book is a result of years of research and interviews with successful investors. He shares the valuable insights and distills them into these 12 axioms that have stood the test of time. Gunther's writing style is captivating, and he has a unique way of blending storytelling with investing wisdom. You'll find yourself hooked from the first page as he takes you on a journey through the highs and lows of the investment world. So, if you haven't already, I highly recommend getting your hands on a copy of the Zurich Axioms. Trust me, it'll be one of the best investments you make. Alright, let's jump back into the axioms with axiom 3, hope. Hope. It's a powerful word, isn't it? Well, Gunther reminds us that while hope can motivate us and fill us with optimism, it's not enough when it comes to investing. We need more than just blind hope. We need facts, analysis, and realistic expectations. Gunther advises us to approach investments with a clear understanding of the underlying fundamentals and market conditions. We can't rely solely on hope for positive outcomes. Instead, let's combine it with diligent research and analysis. By making decisions based on realistic expectations and reliable information, we can make more informed choices and increase our chances of success. Remember, hope's just the spark, but knowledge and analysis fuel the fire of successful investments. Alright, my fellow investors, are you ready for axiom 4, forecasts? Now, here's a truth bomb for you. Predicting the future accurately is nearly impossible. Yet, we often find ourselves relying on forecasts and market predictions. Well, Gunther wants to shake things up and challenge this popular belief. According to Gunther, instead of placing excessive trust in forecasts, we should focus on understanding the current market conditions. Let's dive into thorough research, analyze the present realities, and base our decisions on solid information. By avoiding excessive reliance on forecasts, we can reduce our exposure to potential pitfalls and unexpected market movements. So let's keep our eyes on the present and make informed choices. Alright folks, get ready for axiom 5, patterns. Patterns, they can be intriguing, right? We often look to the past for guidance, assuming that history will repeat itself in the future. But guess what? Gunther has a different take on this. Gunther challenges the notion that historical market patterns always repeat themselves. Sure, studying past trends and patterns can give us insights, but it's not the whole picture. Market dynamics can change. New factors can influence prices and trends. Gunther advises us to consider current market conditions, conduct thorough analysis, and avoid making assumptions solely based on historical patterns. So let's keep our eyes open to the ever-evolving market. Are you ready for axiom 6, mobility? Flexibility. It's a virtue in life. And guess what? It's also essential to the world of investments. Gunther wants us to embrace the concept of mobility and be ready to adapt our strategies when necessary. Gunther recognizes the dynamic nature of the market and he encourages us to stay updated with market trends, economic indicators, and other relevant information. By doing so, we can make informed decisions. Embracing mobility in our investment strategies allows us to adjust our positions in response to changing market conditions. This way, we could potentially capitalize on emerging opportunities and mitigate risks. So let's be flexible like a gymnast in the market of investments. Alright, my fellow investors, this wraps up the first 6 axioms of the Zurich Axioms. I hope you're finding them as captivating and insightful as I am. Stay tuned for the next part, where we'll uncover the remaining 6 axioms and dive deeper into the wisdom shared by Max Gunther. Until then, happy investing, and remember, it's not just about the numbers, it's about understanding the principles that drive the investment world. See you soon!